Welcome back to Equity and Ag, your daily breakdown of the ag markets and the forces moving price action. Let's take a look at what's happening in the grain trade. Corn futures pulled back on Wednesday as profit-taking continued. May corn closed down 2 3/4 cents at $4.43 3/4 cents. July futures slipped 2 cents to $4.53 cents. This week corn has run into resistance near $4.50. That level matches up with pre-January WASD price levels, and each time the market has tested it, sellers have stepped in. The good news for bulls is that May futures held support at the 20-day moving average near $4.40 3/4 cents. As long as that level holds, the broader rally that started in mid-January remains intact. For now, corn appears to be consolidating rather than breaking down. Soybeans were relatively quiet. May soybeans closed down 1 cent at $11.69 cents. July futures slipped just 1/4 cent to $11.83 cents. Trade was two-sided and cautious, with very little new information hitting the market. Traders seem hesitant to push prices lower ahead of important meetings between U.S. and Chinese officials in mid-March. Those talks will be followed by President Trump's state visit later in March or early April, which could have implications for trade policy. Technically, the May contract has posted higher lows the past 2 sessions, but also lower highs. That tells us the market is compressing and consolidating right at the November high, near $11.70. The next major headline will likely determine direction. Wheat futures saw more pressure. May Kansas City wheat fell 5 3/4 cents to close at $5.72 cents. Chicago and Minneapolis wheat were lower as well. The weakness appears tied to profit-taking and improving weather forecasts. The Southern Plains and eastern soft red winter wheat regions are expected to receive much-needed rainfall over the next 2 weeks, which reduces some of the recent weather premium in prices. On the downside, support for May Kansas City wheat is near $5.60. A longer-term bearish target would be the 50-day moving average, currently sitting near $5.51 1/4 cents. On the upside, $5.90 remains the bullish target level. Overall, grains are consolidating after recent strength, with resistance levels holding for now, while key support levels remain intact. The next directional move will likely depend on fresh demand news or weather developments. Disclaimer: this content is for informational and educational purposes only and does not constitute financial, investment, or trading advice. Trading futures and commodities involves substantial risk and may not be suitable for every investor. You can lose more than your initial investment. Always conduct your own research and consult with a licensed financial professional before making any trading decisions.